Hello traders, we're going to get a two for today, 2 for 1. I didn't do one yesterday, so I just want to show you this. This is an opening range trade. Often happens whenever we have a gap down. We're trying for a gap fill in that situation. And so this is yesterday's price action. We came down, opened with a gap down and continued down, creating the very first breaker of the day right here. We tried to take these lows but didn't. And so this would be our breaker right here, this green one right there. Let me make it bigger where we can see it, and I'll make that line solid. There we go. So we came down. Doesn't really matter if we take out a high or low or anything. What we're looking for is this gap fill. And so this is settlement from the previous day. We want to get back up to there. And so we did validate the breaker by candle bodies closing above, and then we pushed through with a fair value gap. So our entry would be right here, one tick above the low of this candle. So that would be at 724.5. And let's see what kind of a stop loss we could get at 25 points. 25 points would have got us down, not all the way down past the breaker, but definitely beneath the fair value gap candle, which is that one right there. That's 19 points. So we would have entered around there, taken a little bit of heat, but we aim for gap fill, and we get it. How many points would that be? We entered here, a tick below, a tick above that low, and 40 points to the high, and we got it on these candles right there. They surpassed it. So it would have taken a minute, but we would have got it. And if you had the cojones to continue to hold, you can see that held for a good long while, all morning, until we finally made this run up. Now that run is also a reversal pattern, but you have to go down to a 30-second or a 15-second time frame to see it. This candle right here would be serving as our 1-minute breaker, because you can tell it is a push down and then it pulled back up and turned it green. Otherwise, that would be a red candle. If we go to a smaller time frame, which I'm not going to do, this is actually the low of a 15-second candle. I'm not going to do it because then I'll have to go back all the way through 15 seconds candles to find it, and we've already had another day go by. But you can see we had a fair value gap push down, another one formed right here. This is the only one under the breaker, so we would enter a tick below the high of this red candle right here. And that would put us at 781.5 for the entry. Our stop would go up above the candle that caused the fair value gap, so up above here at 92. That really would be a nice little. I do a standard 25-point stop loss, but I could adjust it to the high of that candle, or even above the high of the day would have only been 22 points. So even if you're wrong, that's a really cheap trade. And it turned out to be a really good candle, a really good one. Getting back to settlement would have been a good aim point. Just high of the opening range would have been a good aim point. But if you really wanted to hold it till the cows came home, you could aim for these relative equal lows, or even we had some 4-hour levels down here that you could aim for, and really made a lot of money on that one. But, you'd have to hold it all afternoon. All right, so that was yesterday. Now let's fast forward to today. The same kind of a deal. We opened with a gap up this time, ran up, creating a breaker to the downside right here, that big red candle. And these can be kind of risky trades, but when we have this situation, there is a 70% chance that this gap is going to fill at least halfway. So it's worth taking a shot at it, because that's good high odds. So we run up, we poke. This is actually a bearish order block, but I still like the breaker to be respected. We push through with a fair value gap. Our entry would be one tick below the high of this green candle right here. And that looks like it's around 751.75. Let's see what kind of a stop loss we would have had at 25 points. Man, it would have been a scary one. 25 points is right there. 77. It would have been a nail biter because you could not have gotten above the candle that created the fair value gap, which would be the ideal situation. Above the candle that creates the fair value gap. And since that was such a big drop, you would have been looking at 40-point stop loss, pretty close to it. So you could have put on a couple of micros and been okay. And then you would just aim for settlement. That's a pretty good risk-reward ratio right there. We got in right there, took a little bit of heat to the upside, 13 points. And then we come all the way down here to settlement, which is 124 points. Even on one micro, that's $250. So two micros, $500. Okay, so once we made the gap fill, our breaker is all the way up here. We'll move that guy down here and just change its color. Oh, there's our breaker right there. And it's almost all the way filling the gap, refilling the gap. We'll change it to a purple guy. And once we got above it, here's a fair value gap. You would enter a tick above the low of this candle right here. So that's 733.75. You would have had to taken some heat. A little bit of heat, not a lot. Let's see what it would have been. Down to the bottom of there, that's 19 points. We have 3 fair value gap candles here. So I would just be going with a static 25-point stop loss and crossing my fingers. I might have even tried to get a breaker in here with a smaller time frame, like a 15-second. Because this push up right here and that one there are most likely going to be respected by this. And then we could have used this fair value gap as our entry. But you would have entered there. See what kind of a move that would have been. That's 27 points, so you'd have got stopped out. Yeah, this would be the better entry. Waiting for it to have candle bodies close above here. We enter there, take a little heat. Then we're consolidating. But from there on out, we stayed above it the rest of the day. Made the all-time highs, continued up, just a slow grind the rest of the way, all the way to the moon. But definitely this trade is worth it just for probability purposes. And this one here, because of the length of this, I don't know that I would have traded like a big contract. I probably would have kept my size small. Maybe try to get another entry somewhere around here. Here's a fair value gap. We just retested it and respected it. So maybe try to get another entry there, like a add to your position for upside, like maybe go on to 4-hour regular trading hour or even all-time high if you were feeling froggy. So those are the 2 from yesterday, and also today was Gorgioso. We also, this was a bearish that I marked out. When you see we're pretty much having a directional day, and then you have a fair value gap, a breaker beginning to validate like this here, and then it fails, go long there. It doesn't have to be, you don't have to go long with a bunch of contracts, but go long as close to the breaker as you can and just try to grab yourself a few points, because that is really common. When on a directional day, you'll see breakers form, candle bodies close below, like they did right here, and then it doesn't materialize. And then here we did finally come down, but we didn't even, I don't think we got very many points. So this would end up being a losing trade. That's 12.5 points down. That would end up most likely being a losing trade for you if you entered here. I don't even think you'd get an entry. But as soon as it came back up and started closing above this thing again, fair value gap to the upside here, I'm going long right here. And I'll put my stop loss 25 points away from that, which would be, heck, that's all the way down to here. And you would have been good for the rest of the day. You could have got at least 25 points out of that move right there. Let's see what that would have been. To there, it's 22. I mean, at this point, you're aiming for blue sky because we're at all-time highs. Just let it go as high as it wants to go. As long as you're comfortable holding it. Right here, I would just say try to grab 10, 15 points. You'd be happy. All right. So we had a couple of those little situations. This bearish order block, we did push away with a fair value gap, took out that low, but then that was all we wanted. An entry in this area would have been fine for a long. Just aim for 900. A lot of people like to short the all-time highs, and I was looking at it in my practice account and considering that. This would have got you a few points. You could have definitely made some money right here. This will be the validated breaker, entered here to that candle there. I can't even see how many points that is. It's only 14 points, but you could have grabbed 14 points out of that if you tried a downside move and killed it quickly. But that's the money. It was a directional day to the upside. We do have PPI coming out in a day or two. Let's see. Today was CPI. Tomorrow, PPI. Yeah. Sometimes they skip a day, sometimes they don't. Tomorrow's PPI. And then should be unemployment as well tomorrow. Yeah. Core PPI and unemployment. And then Friday, consumer sentiment, core retail sales. We have some 9 o'clock news. So that'll be, 30 minutes after the market opens. We got to watch for that on Friday. Core retail sales coming out at 7:30. Should be an interesting remainder of the week. Remember to be kind to yourself and be kind to one another. Love each and every one of you. Until next time.